Recording in progress.
Hey everyone, hope you had a good trading day today or a good day in general. Um, as promised, I wanted to do the breakdown of the trades I took this morning on GU and GBPCHF. All right, so I'll give you a general idea as to how I approach charts, what I'm looking for when I'm looking for a setup, and that's my general process in taking a trade using the concepts that I will be showing you. All right, so I do sometimes trade London depending on the pair that I'm trading, but I find that I mostly trade the New York session because I mostly end up trading like gold or NAS or S&P 500 or oil. So for now, I've narrowed down my list because I don't want to be too distracted with too many pairs. And I do believe I can find a setup with any one of these on any day. So, all right, so let's get into it. All right, so I did not trade London today. I didn't get up in time. Woke up in time for the New York session. And coming into New York, Asia session lows taken. So Asia session sets the initial balance of the day, meaning the initial high and low of the day. The highs and lows are extremely important in the way price moves. And so it is important to note these areas in your charts because you'll find that price will be sensitive to some of these areas depending on the intentions of the market maker. And so, as I said in a post I did yesterday, this is where the money is. So remember, you're always asking yourself, where is the money at right now? Which is where price will be heading to. And in terms of logics, Asia lows taken, Asia highs taken. All of this happened in London session. We have gap time here and then headed into New York session. So coming into New York session, the current low and high would have been the last high here and this last low here. Let's correct that here. Okay. So that would have been the low and the high of the day coming into New York session. All right, so now that I've noted the high and the low, I'm waiting now to see how price reacts to these, whether it's the high or the low, to know what I'm to anticipate after that. And also would want to note that we had this creepy trend going into the New York session as well. So you had 1, 2, 3, 4 pushes into the high of the day. So the fourth push took out the high of the day. And now we wait to see what happens after that. Because price could have just pinned up, pulled back, and then continued. We're not sure what's going to happen, so we have to wait to see. We didn't get a breakout structure here. And the confirmation or the reversal pattern that confirms where price is going for me in a situation like this is either M pattern or a W pattern. And so first, having seen this first stop hunt, I'm waiting to see if there will be a second leg to give a confirmation of a reversal pattern. We did get that. We also got a breakout structure in here, right here. Very small, but it's of note. And we got that second leg confirmation. For me now, in terms of my rules of entry, having seen this pattern, it's a good sign already that yes, there will be a reversal imminent. And so I'm going to wait for a retest to the second leg and wait for an engulfment, and the engulfment is my entry. And that's exactly what happened here. So we had the break of structure here, second leg confirmed, retest. Price did a lot of dancing around in here. We got the engulfment in this candle here, and that was the entry to sell. In terms of targets, this entire trend line here is liquidity, but because the low of Asia was already taken here, I logically would not expect price to be coming all the way back down here now. Doesn't matter, because the whole idea of taking the short trades is to minimize your risk as much as possible, load the trades in terms of scaling them so that you're getting the most out of the trade that you're taking, even though it's a short trade. And the truth is, you're in and out of the trades most of the time within an hour, sometimes even less than that. Sometimes within 5 to 10 minutes, you're out of the trade, depending on how volatile the market is for the day. And so price came back again, retested this high because this created a break of structure and left. Came down, pinned this area, but what told me to exit this trade was the differences. Let me show you. I could have exited here, but I didn't, because as I said, the confirmation for me to exit would have to be a W. And we got this huge engulfing candle here. That was the first warning. We got a retest and a pin hammer. I exited at the pin hammer. That was it. And that was how this trade was executed. In terms of drawdown, little to no drawdown, not much. A 2 pip stop loss. Really good trade. This trade was over within, I think, less than an hour. Let's see. Yeah, within 40 minutes, and I was out. Let's go to GU and see how that went. Similar idea. Coming into New York, 3 hits to the high, 1, 2, 3. Price, in terms of its cycles, you'll find that it moves in threes. So you'll find reversals coming after 3 pushes, or so 3 levels of rise, 3 levels of fall, 3 days of rise, 3 days of fall. Stop hunts come in threes. You have vector candles. Everything about the cycles in the charts come in threes. So you can use that as an indicator to anticipate reversals as well. And I'm trading most of the reversals as opposed to continuations. So Asia, stop hunted, price left. Coming into New York. So New York session starts here. This would have been the high and the low of the day. Right here. Just from here. So coming into New York, the current low and high would have been these. Right. So remember, I'm looking to see how price reacts when it gets to either the high or the low. So the first thing price does, comes to the high, stop hunts the high. So we had 1 push to the high, 2 pushes to the high, 3 pushes to the high so far. Stop hunt clears these highs here. We are now looking to see what price does. Gives us so we have an M, down, middle, second leg here. If you want to look at it the other way around, Could have even had just used this as a middle structure, and this is the second leg. We had a break-off structure. We're waiting for a retest and engulfment. Retest came, engulfment came here, but I think my entry came here, and because I think yeah, I missed the first entry, the first confirmation, and my entry came at the close of this candle here, and that was the trade. In terms of exit, the exit came again when I saw the reversal pattern being created. So this huge engulfing candle, price came back, gave us a retest to that. Got another engulfing. I exited at that point right there. So a 3 to 1, and let's see, 3 to 1. I think that was this was 7, 10 to 1 within an hour because both trades were running concurrently. I think this was about an hour as well. I think so. Yeah, 45 minutes. And within the hour I was out, and that was it. So the point I want to make is sometimes we just need to like keep trading as simple as possible. We don't have to get fancy about it, add all the complications to it, and all sorts of things that distract us from what should really be happening. I'm not discrediting anybody else's strategies in terms of trading. Obviously, once you've mastered something that works for you, then and it works for you and it's making you money, then all the best to you. And kudos to you, because it's a really big mindset game when it comes to trading. And it takes a lot more work on you as a person than even on the strategy itself, because execution is where the money is made. It's not in practice or demo, or it's when you're actually in the live charts and you're to actually take that, press that sell or buy button and execute at the time without the fear and the greed and all the emotions that come up with trading. And so it's at that point that you really define yourself as a trader. So the most of the work is really done on yourself as a person. So the idea, just to recap, if I'm trading London, I'm looking for the same thing. In this case, if I was trading London today, this first stop point here would have been a good sign. That would have been the first thing. I would have been immediately looking for a reversal pattern. I'd have gotten it in terms of this W. Even so, there's even a larger W formation here if we're looking properly, because you have this. It's one of those W's that goes across the way, comes down, and then goes like that. So one of those type of W's. Still a W formation, still a reversal pattern. Sometimes when we hear of double tops and double bottoms, or triple tops and triple bottoms, we are told that they are areas of liquidity, but it's just like any other high or low in the chart. What makes a difference with trading M's and W's is the timing, the time that these patterns are created. The timing is so important when trading. That's what gives you the edge in getting your setups right. And once you have the timing correct, you don't have to worry about you being the liquidity. You're actually entering at there's this phrase that says your stop loss is my entry. This is what it is. So wherever the stop point occurs, that's where your entry should be. And it's as simple as that. So the highs and the lows, the initial balance of the day, the initial high and low of the day, it's an area of note. Watch how price reacts to those areas. Creepy trends, when you see creepy trends like this, you can anticipate a pump and dump setup. It happens all day, every day in the charts. And note your current short-term highs and lows, see how price reacts to those. You'll be surprised to see the kinds of trades that you'll get out of a simple strategy as this. And yeah, it's as simple as that. If coming into London, these would have been the highs and lows. We see how price reacts. It took out the low. We know we need to buy. Coming into New York, price is working into the highs. It's an obvious sell. And yeah, just keep it simple, keep it logical. It doesn't have to be complicated. You just need to practice, set the rules that work for you, work out the timings that work for you, and just get it done. Execute when you're to execute, and that's it. You can get some crazy risk to reward ratio trades doing it as simple as this. And the drawdown most times is little to none. This was a 6 pip stop. This was even too big, but it doesn't matter. Price barely took about 3 pips or so. And yeah, that's it. That is it. I don't have to be in a trade for hours. If a trade goes on for more than 2 hours, I exit the trade. It doesn't make any sense. It means that it's not working out. And I need to revisit what I did there. And yeah, that's it. After, I don't take any trades after 11 unless there's going to be news, and then we can look to trade after the news in the afternoon if it's FOMC or any news, big news event like that. And yeah, you just have to have rules that you work with that guide you and help you to go in when you're supposed to go into a trade and exit when you're supposed to exit the trade. The reason why I would not have expected, even though I'm not really trading with a bias, I'm just looking for the setup and the best setup on the day. The reason why I would not have expected long sells here is because of the general bias. It doesn't mean that I don't know the bias of the day, because if we look at GU currently, GU is still bullish. Let me show you how and why. If my chart decides to switch. All right, so I've marked out my levels, monthly, weekly, daily highs on the chart. So, and the day counts and the level counts. Currently, we have a day 1 long here, day 2, this high was taken. Now I'm looking for a day 3 push. I'm not seeing that yet. This high is yet to be taken. And remember talking about the three how price cycles in threes. I'm anticipating a level 3 push here. It may go to the monthly high. I'm not sure. The last week's high, I'm not sure. As again, we wait and see, and then we react. We don't predict so much. We have a general idea as to where price is going, but not so much into predicting, just reacting. Because the truth is, they have to show their hand for you to know what to do. It's as simple as that. And yeah, so yeah, GU, I'm anticipating some highs to be taken out here. Then looking looking for a reversal. Not sure if it's this week. We have a lot of volatility this week in terms of a lot of news events going into the holidays. Not surprising. A lot of manipulation expected. And we just have to be careful. But at the same time, the same things play out every day, all day in the charts. It's just for you to time your entries and know your rules and stick to the rules. Don't deviate from the rules. All right, I hope this was helpful. If you have any questions, you can ask in the comments below this video, and I'll be sure to answer. All right, have a great day. Bye.